Hello, everybody. I'm James Bowater. I'm moderating this panel today, and I'd like to invite everyone up onto the stage. So Björn, Richard, Scott, and Sander. Put your hands together, please. God, those lights are bright. So we've done the good lunch bit. No, Epstein was not Satoshi. I thought that would get a bigger laugh, but anyway. Right, on a serious note, it's a very important topic. I think that everyone knows that treasury companies, Bitcoin treasury companies and crypto asset treasury companies were the de rigueur in 2025. And I think we need to see how it's all looking and where it's going to go this year. And we've got a really, really good panel. But before I say anything more, I'm going to go down the line and ask everyone just to introduce themselves and tell us a little bit about their particular project. So I'm going to start with you, Björn.
Good. Hey, good afternoon, everyone. I'm Björn. Originally, I've been a Bitcoin miner, built one of the biggest Bitcoin mining sites in South America, and started Aurelion a few months ago as a digital asset treasury company for gold, specifically Tether Gold. We raised 140 million, bought some Tether Gold back then in October, and since then it has been doing really well. I'm very lucky here in this regard, and yeah, very excited to be here and think a little bit about this here.
What MNAV are you trading on?
Let's not get into those details yet. And besides, not everyone knows what MNAV is. Rich, never make an assumption.
Hi, Rich Byworth, chairman at Future, a Swiss Bitcoin treasury company. We're in the process of being acquired by my colleague down the end there, Sander. I sit on the board of Scott's company as an advisor.
So not incestuous at all?
No, we figured we'd have a good chat, let everybody understand some of the inner workings of what's going on. But I've been talking about Bitcoin treasury companies for about a year and a half. I was a convertible bond trader in a previous life in investment banking, so help people understand the convertible bond structure and how it's accretive to MNAV production for people in a positively accreting way through dilution. But also the very basic, once you're trading at a positive MNAV, how that can be used to dilute your shareholders very accretively, meaning getting more Bitcoin per share for those shareholders. So I do a lot of education in the space as well as obviously help some of the founders in the space.
Does education mean not making assumption that the audience knows exactly what the terms are that you're using?
James, I don't know how much you want to do this, but yeah, we can.
Oh, come on, please. It's after lunch.
But we should talk about MNAV and what it means.
Well, then let's have a definition.
Why don't we have a show of hands of who knows what MNAV means in the context of Bitcoin treasuries? You put them a little higher? So what do we got? Like
10%.
10% of the room. Yeah, okay.
Maybe 20.
Shall I quickly explain?
I think that'd be a good idea.
Okay, so MNAV is multiple to NAV, net asset value. So if you imagine a company is sitting on a treasury of Bitcoin, if it's trading at its NAV, then it has a 1 times MNAV. In a very bullish environment, we have seen, Smarter Web Company was the prime example, which is a UK-listed Bitcoin treasury company, trade as much as 50 times MNAV. Obviously, very bubble territory for these companies, but as we were seeing the level of growth that they could do through accretive dilution by actually selling stock at that level of premium to buy Bitcoin, they were quickly filling the gap on that multiple. So,
and definition of accretive, please.
Accretive means, if you think about dilution generally in financial markets, you're thinking about the fact that you as a shareholder are owning less of the company. But when you're holding a Bitcoin treasury company, you're looking at holding as much Bitcoin per share as you can. So when you're selling at a premium to the NAV and using Bitcoin to buy all that sort of air gap that you've essentially created through that equity issuance, you end up with more Bitcoin per share. And this is the goal of companies like Strategy, Connecting Excellence, and H100. So that's really a big part of what the game looked like in 2025. That game does not exist anymore. But there are other capital markets tools that allow people to accrete more value to shareholders through using different capital markets tools.
Okay, thank you, Richard. Scott, perhaps you'd introduce yourself.
Yeah, so Scott Ellam, I'm the CEO and founder of Connecting Excellence Group PLC, ticker XCE. So we're a little bit different to other Bitcoin treasury companies in that we started buying Bitcoin as a private business in 2021. And if you remember, if it makes you all feel a little bit more comfortable today in my room, the price was about 51,000, it went up to 61, it came right back down to 16, and we just bought throughout that period. But the business is a international executive recruitment company. So we place senior level candidates with the big four consulting firms, place them with magic law firms, logistics businesses, civil engineering, construction firms, and AI intelligence companies. So our revenues are uncorrelated to the Bitcoin price. So our model is all the aspects that Richard has spoken about. We've built a team of capital market specialists on the board, and we have the ability to run a Bitcoin treasury in an aggressive manner. But the operating business grows as a direct result of the Bitcoin treasury as well. So I suppose the main key difference there is, in order to grow an executive recruitment company, what you need to do is attract staff. So attract them to join, motivate them to perform, and then retain them. So our model going forward is to be able to offer people the same modest basic salaries that you have in our industry, high commission in our industry, but building up long-dated performance-based share options over the long term. So our staff's long-dated share options are linked to A, the operational growth that they deliver, B, the Bitcoin yield that we can create using the Bitcoin treasury strategy, and then C, the compounding annual growth rate of Bitcoin throughout their career. So whether that's 10, 20 years, they are by proxy long on Bitcoin. So that's a summary of the business, if that helps.
No, that's fine. Thank you very much. And last but not least, Sander.
Hello, everyone. I'm Sander Andersen, the executive chairman and founder of H100. We took a small health tech firm public in April last year and started accumulating Bitcoin in May, and have since raised around 120 million, and now sitting on around 1,046 Bitcoin. The last 3 years of my career, I worked with family offices and introduced them to different Bitcoin strategies, and I'm a strong believer that these Bitcoin treasury companies are going to be the bridge between the Bitcoiners and the traditional financial system.
Excellent. I think where I'd like to start is as I said at the top, I mean, there was a huge movement for treasury companies. Obviously, you know, MicroStrategy has been around for a long time and very publicly so. But what I saw last year was this massive wave of people jumping on, and I think it's fair to say, and Richard, you mentioned the word hype, and I think that there was definitely a lot of hype driving things, and we saw, like Andrew's company, SmarterWeb, going 50, MNEV. So, you know, that I think coloured things a lot. So I think the question about are crypto treasury companies losing edge in 2026 probably is alluding to what's going to change about the market and all the rest of it. So, I mean, I think if I could go back down the road, Sana, and start with you, what is it that H100 is doing differently, and what is it that what has alarmed you the most about what happened in 2025?
Yeah, I think 2025, I think a lot of people had a lot of expectations for Bitcoin, and we see Bitcoin as a commodity, and commodity companies has a tendency to trade at a premium to net asset value in a bull market and a tendency to trade below in a bear market. So these companies in 2025 was able to raise a lot of money, and we saw that as a fundraising period. And now we are entering into turning that Bitcoin into a productive Treasury that can accumulate more Bitcoin, because the main KPI for a Bitcoin Treasury company is to get more Bitcoin per share. In the short term, we are not so much focused on the price. I mean, everyone loves when the price goes up, but these companies are built to accumulate more Bitcoin over time, similar to a real estate company or an oil company. And I think 2026 will be the year where we see people that has this significant treasury will start accessing credit. That's especially where I'm most focused on. And that credit will be used for increasing shareholder value with different strategies.
So this digital credit, as it were, what's the collateral?
So I'm of the opinion that Bitcoin is the best collateral in the world, and especially now with all this geopolitical tension, that if you want to lend against an asset, you want to lend against an asset that are geopolitical neutral, and you know that you can have control over even if the government fucks up. And I think Bitcoin is a great position to be very creditworthy and will access a lot of credit to these companies that has a lot of, in my opinion, Bitcoin on the balance sheet.
Okay, good answer. So, Scott, same thing. Same question for you.
Yeah, I suppose
Where did it go right and where did it go wrong in 2025? Let's do it a slightly different.
Okay. But just echoing what Sander said, Bitcoin is a pristine collateral, and the gap between it being recognised as a pristine collateral by the traditional finance space is simply education and then the dampening of the volatility of the asset. There's no other asset where you can verify it 24/7 globally. You have a price mechanism that's the exact same 24/7 globally. So I can see where businesses holding thousands of Bitcoin like Sanders have got that advantage in the future. But where did it go wrong in 2025?
Before you go any further, you're using a word pristine. I mean, I don't want to scare anyone in the room, but I mean, I was having a conversation with the father of cryptography, one of them anyway, at Satoshi Roundtable last week. I won't say exactly what he said, but pristine might not be the right answer if there is a quantum issue.
If there's a if quantum computing starts next week, I'd be more worried about your bank account and the stockbrokers' registers of shares and the nuclear codes than I would be about them hacking a known wallet in Bitcoin and stealing that Bitcoin.
I think you'll find it's the historic wallets we're worried about. But anyway, carry on.
Even the historic wallets have a higher level of encryption than your average bank account. So Satoshi's wallets are not getting hacked before your bank account.
What, even with the quantum threat?
Yeah. I mean,
Yeah.
the grade of encryption that you have, even at the early stages of Bitcoin wallet encryption, is much higher than in your standard bank account infrastructure.
No, that I know, but it's actually quite a real thing.
If you decide not to buy Bitcoin, on the worry of that, you're going to be waiting for a long time, and eventually when quantum is it's upgraded and there's a consensus in the network that this upgrade is safe and achievable to protect against quantum, it's going to be a lot more expensive to buy.
Okay, all right. Watch this space.
The latest quantum computer from Google, I think, has 150 qubits of processing capability. To hack Bitcoin, you're looking at about 20 billion qubits. Mm-hmm. So the multiple that we need to get to in quantum computing capability is absolutely exponential. We're at least 10 years away, and we will be able to do a soft fork of Bitcoin by then, and everyone will be able to move to new wallet infrastructure.
Those who've got access to their wallets.
Yeah, I mean, look, quantum will eventually break Satoshi's wallets. Yeah, yeah. There's no question of that. So you will have 1.1 million of Bitcoin come into the supply. And that will be maybe 10, 20 years from now.
Yeah, okay.
And with that in mind, the question that you asked there, I suppose, where did it go wrong?
Just say, don't use the word pristine, because it's just a little bit setting up for a fall, that's all. Come on.
If we're stood on this stage in 2036 and quantum computing has cracked Satoshi's wallet, I will take the word pristine back, but unless
all right,
that is the case. What I was just going to touch on was what goes wrong. I think human emotion and human understanding of the asset is what tends to go wrong, and the price in the short term is not a reflection on the asset class. One Bitcoin is still one Bitcoin today, regardless of what somebody's paying for it in the next hour. So,
Richard, what went right, what went wrong?
I think what went right was that people started to understand that there was a need for these Bitcoin treasury companies. And what is that need? And that need is, as Sander touched on, fixing what is broken in the fixed income markets. And a lot of people attribute the word Ponzi to Bitcoin treasury companies. And I actually do think that there's a Ponzi involved. And the Ponzi that's involved is the fiat system is a Ponzi. If you look at real rates in bonds, they're absolute nonsense. You would never lend money at the sort of rates that bonds yield you if money was real, which it isn't. So what you've got is a situation where the fiat Ponzi is being exposed by real money and real pristine collateral, as Scott called it, that is backing these bonds and backing these preferred equity products that Sailors started with. But it is opening the door for an interest rate that is backed by the CAGR of Bitcoin, which is the real growth rate of a proper money being adopted by humanity. So I would say that has been an extremely positive step, that a much larger segment of the investing community has understood that. You think about an equity manager trying to outperform the S&P, they have no choice but to be buying Nvidia, Apple, Amazon, even at really extended valuations, because if they don't, the passive flows coming into the index funds are going to just wipe them out. So what do they need? They need something that can outperform those companies. They need to buy Bitcoin. They can't buy Bitcoin because they're a fund manager and they have a very clean allocation to equities, let's say in the US, with a mandate to outperform the S&P. So they can't buy Bitcoin, but they can buy a business intelligence company that is accretively diluting its stock to get more Bitcoin per share on an annual basis. So on top of the compound annual growth rate of Bitcoin, this last year gone by, strategy added 25% more Bitcoin for every share that was held. So they're continuously growing that base using products like we've discussed.
And as the only non-Bitcoin treasury company in the title did actually get changed to crypto treasury company, but I'd argue also that gold isn't really crypto. But you're a gold asset.
Well, digital gold, right?
Digital gold, yeah. Sorry. So perhaps you'd have your view on this as whether or not.
So, kind of looking back a little bit in history of Bitcoin, right? Like we have these 4-year cycles, and every cycle brings us another theme, not scheme, but theme. Like 2017, we got the ICOs, initial coin offerings. Then 2021, we got like the memes, the digital art, and last year, 2025, we got all of the digital asset treasury companies. And out of each of these cycles, in my opinion, came some innovation, right? Of course, a lot was hype, a lot was, interesting, kind of looking back to it. But also, all of the ecosystem we have today is built basically out of these opportunities that were created in these moments. One very interesting thing is Tether, right, where a stable coin was launched and then really grew a lot over these cycles. Now has 500 million users, $180 billion in assets under management. Basically, the biggest financial inclusion in probably the world's history, and it has a lot of real utility. And so I think that is something that we will see here as well. A lot of it is fixed income and kind of like offering new products to existing investor bases that are restricted in what they can invest in. But I think there are also probably more utility going to come out of the treasury companies in 2026 and going forward. I'm very excited to see many companies going in different directions. And so in our case, with having digital gold, right, which is a little bit different to Bitcoin. Well, Bitcoin also is called digital gold, so it's kind of the same. I guess we should have called it digital gold treasury companies. But the interesting thing, what we're working in terms of utility and where we're going towards, is to say, hey, like Bitcoin and I agree with us, is a supreme asset. It's probably going to be the most exciting asset over the next 20 years. But at the same time, what we're saying is, well, it's not quite there yet. If we look at what happened today and these whole last days, and it kind of will repeat like this, it's growing by adoption, but it's growing not exponentially. It's actually growing in something called a power law by the network effect. It's really a network of people adopting it, and that's how it grows. And gold is something that's there today. And we kind of looked at the treasury companies and we were like, wait a minute, wouldn't people want to have the same kind of way to invest in gold than they want in Bitcoin? And is there a way to give them superior exposure to gold? Some gold is actually backed by gold bars and that has more transparency, that is digital first, so it can be, it's fungible, it can be sent around, divisible, and all the good stuff that crypto brings with it. And so that's how we found Tether Gold as a very interesting asset. And we're basically doing in the end exactly the same thing, right? Offering a new way for existing markets and existing investors to invest in a product that so far they couldn't invest in.
So in terms of, I mean, I think that, I mean, certainly there's been a lot of scary activity recently. And I mean, I think it'd be rude not to talk about the sort of the price action of Bitcoin and also therefore I mean, just various things thrown around like, you know, for the first time in a long time, it's worth less than its electricity production value, and, you know, then also the threats to treasury companies where they bought it out and all of those things. I mean, is there a sort of an, and I'm not being a negative person, I'm just asking what the, not Armageddon level is, but I mean, I've seen 42 being thrown around a lot, but then they always do throw around 42 because it's the meaning of life. True story. Hey, look, I've got funny things to say. But 42 is being thrown around. It hit 69 today, another funny figure. And we had the Epstein joke. So, I mean, you know, all in all, it's going really, really well. But I'm joking about what is your feeling collectively on the price? I think gold actually is an interesting parallel as well, because we've seen the highest jump up in price of gold in history as well, and that's obviously come down a bit. But what in your opinion is the level that you guys need to go, we might need to think about some stuff here?
So first of all, how most Bitcoin treasury companies have structured their capital, it's no margin call involved. I mean, we have a fiat number that are lower than what we had before, but I want to be quite specific and say this is how the fiat world look at Bitcoin, but you have 65% of all Bitcoin is owned by private individuals, and most of these private individuals are excluded from most of the traditional financial systems. So what we also do as a Bitcoin treasury company is actually helping Bitcoiners, which represent over $1 trillion of wealth, which the traditional financial industry doesn't seem to care about yet. We are then developing a relationship and eventually products and services for them. So from a Bitcoin treasury perspective, you want to hold long-term and you care less about the price. Again, we all want the price to go up, but smart Bitcoin treasury companies have structured a balance sheet where it's no margin call or any forced selling involved, and you are you are as confident as you can be.
I think the key word was smart treasury companies.
Yeah,
and I think we all know that there's an awful lot of, during the hype, that an awful lot of not very smart treasury companies were either formed or
Correct, but if you have been in this industry for quite some time, volatility is something you don't necessarily like it, but you're used to it.
So we've already been through an 80% drawdown as a business.
Yeah.
Buying Bitcoin and increasing our revenues more than
51 down to 16.
but we in that time, because our revenues uncorrelated to Bitcoin, our revenues were growing 35% year on year, and we were acquiring more Bitcoin. Now, I have absolute conviction that Bitcoin will always be worth more in the future than it has ever been worth in the past. So as far as short-term price goes, I don't make predictions, but right now it just looks discounted from its previous all-time high. And I would, as a base case of it being comparable market cap with gold, is it better than gold? Well, it's divisible, it's transportable, it's easier to store in your head and move across borders. It's easier to use as collateral and verify. So you put a market cap of 10 times higher than gold as a reasonable long-term outlook on it. So we're bothered about acquiring more Bitcoin, not what the price is. And last month we did, as an example, we've placed people across the world in uncorrelated roles. Revenues come in before the end of January. We've bought a Bitcoin. And we just plan to continue doing that when the capital markets are maybe less exuberant. But I think you'll see the same environment, if a little tempered, to what happened last year, where Sanders' business has gone to 1,000 Bitcoin in a quick period. There's a lot of capital coming in. That wave will happen again. You'll see it repeated every time that environment comes back, and it will be coming back.
All right, Richard?
I think to get through periods like this, it requires a deep understanding of what Bitcoin is. And if you deeply understand what Bitcoin is, then you are extremely relaxed in this period. In fact, if you were to go to your wife or girlfriend tonight and say, Hermes handbags are on sale 50%, she's going to immediately tell you to go and buy one, right? And this is the thing, because
Moderately sexist.
well, it's a comparison that I think a few people can understand in this room. And so I think that the point is that when you understand the value of the asset, and for the wonderful women we have in the audience today, that is, it's a status game. They want to show their friends that they have a Hermes handbag. I think this is something that we see a lot in that type of sort of play. I'm going off topic here.
Went so far out of a risk curve with that analogy.
You're digging the hole bigger. Come on.
Yeah.
Undig.
Undig. The point that I'm trying to make is when you understand the value of something, then you want it when it's cheaper, right?
I want a Birkin black.
Exactly. You're a special
That's
type
for
of
me.
chap, James.
All right, okay.
But yeah, I think that's the point. I think when you understand all the attributes of Bitcoin, the fact that you can go and buy more Bitcoin this week with your weekly dollar cost average, it's more compelling, right? You want to be able to get more Bitcoin if you understand what Bitcoin is. And, we talked about it earlier this morning, but the end of every year, you want to make sure you've got more Bitcoin than you did the year before.
So I mean, the sort of the takeaways I'm getting from this is that provided your treasury company has an underlying business generating sensible revenue, and you don't have any margin call on your Bitcoin, everything going to be just dandy.
Every business at some point will do that. You'll either have a cash treasury that is depleting in value, or you're storing it in a long-term store of value. So private companies as well as public companies, I think, will start considering that over the next 5-10 years.
And you worried about gold?
Not really. Not in the next 100 years until we figured out how to mine asteroids.
That's next week, isn't it?
Probably quantum is an easier problem to solve than that, but I think there's a certain time and place for Bitcoin. I think it's the debasement trade, right, that is very important for gold. And I've been tweeting about this a lot. I think the three most important assets in debasement trade is gold, land, and Bitcoin. And I do think Bitcoin is a very different animal right now. It's a little bit like a teenager, right? Like when a person grows up, the person goes through different times, and when the person is a teenager, it behaves like a teenager, even though one day it will be an adult and will behave like an adult. And if you look at Bitcoin's market cap today, it's a tech stock market cap, right? We're somewhere at 1.7 trillion or so, right? Next to what is there? I guess Amazon, Microsoft, and things like that. And so we're trading pretty similar to those, and traders look at it in a very similar way, and so there's quite a bit of correlation, right? Now, gold is somewhere around, I would say, 30 trillion right now market cap, so it's an order of magnitude bigger. I think Bitcoin will get there over time. It will probably take maybe 10 years, in my opinion, or so. Also says a lot about what I predict the Bitcoin price will be in 10 years. But over this time of adoption, right, I think gold is still the major asset in the world. And when we're looking at the uncertainty right now that has been introduced by the dollar over the last 5 years, right, starting with the use of it in a very political way, and then kind of continuing last year. For me, the moment was when kind of I really realized what's going on, when Elon Musk went out and said, "Hey, you can't fix the debt problem. I can't fix the debt problem, right? I can go to Mars, but I cannot solve the fiat Ponzi scheme." I was like, oh, wait a minute, that's very interesting. So what does that say about the dollar, right? And so when we put one and one together, I think which many countries are doing, then I think the clear solution for many countries right now is not so much to buy Bitcoin. It's really more to buy gold. So I think in the very short term, then that's exactly what we're seeing, in my opinion, right now. Gold is in very high demand and it's very important. And I believe there's a good opportunity for this to continue quite a while until gold finds some kind of equilibrium with the dollar, and it's only a question of how far the dollar is gonna depreciate, right? I think as gold is the stable asset, Bitcoin is like the adopting asset in adoption, and dollar is the thing that is the fiat scheme. It will always go down.
All right, I mean we're getting towards the end. I mean, I think my last question before, if anyone wants to ask a question, think about it now, and I'll ask for a show of hands in a second. But M&A, and are you guys looking to hoover up any of the sort of smaller treasury companies that might not quite have got it right, or what's happening now?
I mean, I think because
there's quite a few with what I would call small numbers of Bitcoin on, and not really thought through their revenue generation side, etc.
Yeah, I think you do M&A mostly because of increasing your team and putting the right expertise in place.
Not just buying the Bitcoin really, really cheap.
No, because it's quite hard, because the company always has the option to liquidate and delist, and there you get 1 times MNAV. If you look to oil and shipping, and where you have more illiquid asset, you can do this MNAV or net asset value arbitrage. But from our experience, it's a little bit harder in the Bitcoin space. Yeah. What we have seen, and what I believe could happen, is that instead of merging equity, you can merge balance sheets to issue credit instruments on top. So this is a way where you can scale and get size, and then start issuing credit instruments as a collaborative alliance, rather than merging all the equities and all the complexity of cross-border M&A and regulatory hurdles.
Okay. Yeah, I think it probably covers that one.
And in our industry, just building on that point there, we're in a traditional industry in executive search where a lot of businesses are privately owned, and there is no way for them to sell the business, because the revenue is the people within the business. And if I approach a direct competitor talking about buying their company, if word gets out, their best staff approach me and want to join my business before a transaction happens. And private equity coming into our market by companies, invariably it goes wrong, and the best consultants leave and join private businesses like mine. So for us, it's about using the revenue and cash flows to build a strong Bitcoin balance sheet, generate money from the capital markets to increase Bitcoin per share when that's available, and ultimately kind of welcome businesses into the group and say, look, if you've got cash reserves, we'll switch it into Bitcoin. We can pay on long-dated performance-based equity. And ultimately, we're trying to build a business there that disrupts our industry and says either your best staff will come and join us, you can come and join the group, or worst case scenario, we'll show you exactly how to build a Bitcoin balance sheet, and we're quite happy for you to copy us, because for me, Bitcoin business balance sheet adoption is one of the most important drivers for education, integration and adoption into the wider corporate landscape.
To maybe tie it all together into your question, if you think about the point that Scott was making about pristine collateral, the fact that many of these Bitcoin treasury companies have a huge collateral base, but they don't necessarily have a operating business like Scott's that's kicking in a large amount of cash flow every year. I think the M&A that you're likely to see in the coming years is going to be around those Bitcoin treasury companies acquiring cash flow generative businesses to really crank up their accumulation. So I think that's probably the avenue that you'll see for M&A.
Okay. Right, one or two questions, if anyone's got one. Otherwise, we'll wrap it up. I can see one guy on the right, about 4 rows down. Do you want to stand up and yell?
Yeah, I'll shout at him. Why should, or what's the benefit of a UK investor or Swedish investor to get exposure to Bitcoin in your companies over perhaps going for MicroStrategy?
So in our case is that if you have a management team that are working every day to increase Bitcoin per share, and we are at a significantly lower size than MicroStrategy. If I raise another 1,000 Bitcoin, I create 100% Bitcoin yield for my investors, and that will take Michael Saylor many years to do exactly the same. So we have the growth story and Bitcoin yield narrative that I think is quite attractive if you think Bitcoin yield is a great metric to invest in.
And echoing Sanders' point there, we IPO'd December the 11th. Since then, we've raised capital, we've increased Bitcoin yield by, I think, 365%. So there's been a marked increase in Bitcoin per share for investors in the early days, which is expected. We've also released the XCE Bitcoin bonds, which are innovative Bitcoin bonds Richard Byworth designed, that the conversion price tracks the Bitcoin price as well. So I think today, with 20% movement in our share price up, those convert and increase Bitcoin per share as well. So I think you're just looking at a scale and an opportunity there where we're an 8 million market cap. We've got a lot of accelerating to do, and we've got a novel business strategy in that we attract more revenue the more our balance sheet accelerates and the more our share price accelerates as well. Whereas you're looking at MicroStrategy, it's kind of, you're investing in the JP Morgan of the Bitcoin Treasury space. It's already very well established.
All right, guys. Well, thank you very much. We are, I'm afraid, out of time. I think we could have gone on a lot longer, but hopefully you guys enjoyed what you heard, and thank you very much indeed. Perhaps you put your hands together for the panel. Thank you.